All right, guys, this so I'm gonna do just a small breakdown. I'm not gonna do like a whole markups breakdown. I feel like me just doing a video here as a small update would be a lot more beneficial per se. So yeah, let's just get started. I'm pretty much just gonna be following up from yesterday's call, which is April 20th, right, where we were around here and we said that we wanted to look anywhere here. So let's go ahead and get started. All right, so, all right, first thing I did this morning, right, was highlight my potential POIs. Okay, this is, right, my daily inefficiency slash H4 inefficiency, and but more importantly, daily inefficiency right there. Okay, so this is area of interest number one. And as we come down from that daily, right, go to our H4, right, what do we see here? Right, we see a 50% down here as well, right? But, right, when we go to our M30, right, we now see, right, that this looks very efficient wick, and then it's inefficient wick to wick, okay? So I'm still going to, note my H4 POI, my daily inefficiency, right? I'm still going to note them, but you have to be realistic with yourself, right? In the aspect that, right, if we're looking at our M30, this is our daily and our H4 is a bit below that, right? If we're looking at, let's say it's 7 a.m. already, right? In my opinion, right, you guys know that I only trade in between 7 a.m. and usually between 10 a.m. That's usually my window, right? Because that's the overlap session. So I try to take advantage of the liquidity that comes in at that time to then catch a move. Right, and as we talked about yesterday, this is the first time we're getting a legitimate pullback in comparison to previous impulses, right? So I need to make sure I don't miss this move. So that, yes, there is a daily inefficiency here. Yes, there is the H4 inefficiency a bit below that, right? But it's not realistic if we're already struggling in price, right? And we're already struggling. If we continue lower, then just based on theory, that means that there is a potential redistribution and the movement is to the downside. So it doesn't make sense to want to wait for this or this if we're already showing signs from here, right? So I know the only way now that, for example, this POI would be valid is if there's interruption, we hit the POI and then we give the reactions. Sorry about that. Anyways. Right, so let's get to the actual idea. So it's 7 a.m. here. This is when I start essentially looking at my chart. Okay. First thing I know. Right, where is my immediate leg? My immediate leg is here. This is my immediate leg, right? Because we immediately, right, as soon as we took out the initial range, gave out one final push, gave a move down, excuse me, then we see that we immediately come back into the range, right? We now see that price essentially gave a break of structure. I wouldn't necessarily call that a break of structure. I would more so call it a liquidity grab based on, right, new low, created the initial, or we took out the preliminary level of structure, sorry about that, took the preliminary level of structure, solidifying this as a low, right? But this is not a substantial low compared to this low or this low, so momentum is definitely slowing down. So now, also, right, if we're looking at a skim, right, we're thinking of skim, right, if we're looking at a selling climax, right, we're seeing the peak in volume and we're seeing slow diminishment, right, which is exactly what we love to see. So right? Coming back to price, right? We give the reaction, right? Which is, you know, this isn't convincing enough. I'm not going to try to buy here immediately after here. Why? Because this is a continuation BOS, right? This is not the full reversal BOS, right? Another continuation BOS here, right? Now, right, what happens immediately after that? We now have a disruption, right? Because the final unmitigated point here was taken out from the final leg to the downside. So now this is a sign of major reversal, in my opinion. Why? We're seeing an extremely deep retracement, right? We're seeing a series of continuation BOS. So my new immediate leg, right, is from our solidified low to our new high here. All right, so, right, the thing now, right, is I'm very cautious because we haven't taken out the entire leg yet, right? So if we're looking at order flow, right, we're seeing this potentially 50% here, right? And then mitigation to the downside. That's why this is now seen as a disruption. So the issue now is that there is liquidity sitting here, equal lows, relative equal lows, right? But there's an order flow continuation here. So when we're looking at time right now, right, it's the perfect time to execute, right? But my only issue, right, is where to execute, right? Now this, as soon as we take out structure, it is okay to take this trade, right? But if you're taking this trade, right, if you're wanting to take order flow with your point of validation being down here, that is completely okay. And now the one issue that I have, right, is that even though we disrupted order flow, that doesn't mean that there can't be a mitigation still in play, which is in there, right? And so when I was looking at this, right, I was a bit confused, right? I didn't acknowledge this mitigation off the bat, right? But the first alerting sign was this massive bearish candle, right? Potentially showing a reversal pattern here. So taking this trade is not only in terms of the leg, it's in a premium, right? And I'm only trying to catch the continuation here. So I would much rather wait, right? So now here's the issue, right? The issue here is that this gave a retracement, I believe, 30-second, yeah, you can see 30-second candle open was tapped, right? And then that immediately disrupted order flow to the upside. So the only way this bias is invalid is if we take out the entire leg, right? So now that we're looking at this, right, this is now bearish order flow in play, right? We have taken out liquidity, which is perfect, right? Liquidity is our charging factor for our upside movements. And immediately after our liquidity is taken, we get a pullback, right? And then now we're coming down to take liquidity out. But I hope you guys can't hear my dog. Sorry about that. Anyways, the issue here now, right, is we have essentially stopped before we've taken out a potential the leg low. So when I'm looking at this now, right, so this is now an extremely deep SC. So I'm not trying to take this off the bat. I'm not trying to take it off of here, right? It's okay, but the thing is the only way for this entry to make sense, the only way to go break even is if you're going to wait for the entire leg to be taken out. Well, not this leg, but the last preliminary structural range here, right? You're either gonna have to wait for that to break, or you're gonna have to wait for the pullback to you know, essentially begin, or to, you know, solidify itself, then give another push down, then wait for that leg to be taken out before you can go break even. That's the only reasonable way you can go break even. So even though this is still a you know, a good trade, you're picking a low in terms of order flow. Okay, but in terms of structure, you're 100% okay, because we're seeing a potential disruption, right? But it's still high risk because technically momentum is down. So this is where the important part comes into play, right? So immediately after we see this move to the upside, right, we come down and we take liquidity again, but we fail to break the low again. So this, in my opinion, is giving me signs of a potential reversal. So as I'm going through my time frames, right, I'm looking at structure. I'm looking at potential order flow disruption, right? So what do we see? Right, low, high, low, high, right? Pretty much come all the way down, low, high, unwillingness, right? But no break of structure, right? Remember, original course rules, lower, high, lower, high, lower, high, right? There is also no disruption in play, so it's hard to make any type of assumption. So, right, immediately after that, we come lower, but this is where something key happens, right? What are we seeing now? Right, we're seeing a potential selling climax, right? Seeing the secondary test on lower volume, right? And we're seeing an increase in volume, right, in the potential spring, but, right, it's still preliminary, it's still smaller than the regular selling climax, right? So what happens after here, right? We come to mitigate inefficiency, which is potentially, I believe, 30-second. Right, 30-second inefficiency is filled and reacted. Right, filled, reacted, right? As you can see, it even took out a pretty much a micro low here, right? But that's all it needs for this to be a solidified high in terms of structure. So the solidified high is taken out, right? Whether you want to say that's your inefficiency space there, right? This is now taken out. That is a disruption of order flow, right? So if you're wanting to take the trade, right, you can have your point of validation to be here, or you can even want to be safe and you want to put at the leg low, and that is here. So your point of validation would be the leg low, and that's 100% okay. But the execution, right, if we're looking at 30-second, right, this is my candle of interest, right? And even if you wanted to take it from here, that's 100% okay too, but you just have to make sure that your SL is placed correctly, whether it's the low of the spring or the low of the leg, right? So either way, this is a 3.5 pip stop. This is a, I usually like to have my 2 pip stop as a, as a set stop loss, but anyways, it's a smaller stop than that, right? So it could have been easily a 1.5, all right? So the position is now here, right? And where are my targets, right? Obviously leg high, if the bias is correct, then next high, right, which is a potential turbulence point, and then obviously intraday target would be at this major high here based on, the final leg down in terms of major intraday, right, which would have been 40 pips. But anyways, right, this is also a very good lesson. So that was the entry to execute to the upside, right? But that is high risk, remember, because we're anticipating this to be a solidified low, but we're only anticipating this because of the disruption up here, right? The final unmitigated candle wasn't mitigated, it was broken through. And even though something was mitigated, right, there is still something there, right? I think that you guys should understand that means something. So immediately after this potential entry, this is now important because, right, this is now showing its hand. Why? Because we failed to break the leg low, right? We now left unwillingness. We have a schematic. We have a break of structure to the upside. We have a new structural range, high, low. So now it's just about finding the retracement, right? And this is a mistake that I did this morning too. I was looking for this reentry. Right, I was looking at M1, right? And not M2, 30-second, I'm sorry. Right, and I made a mistake here, right? I was looking at potentially, right, pretty much seeing, right, this as a final candle to the downside, this as another candle to the downside. So I actually executed here with my point of invalidation being at the low here, right? And that was a mistake, right? Because obviously that instantly hit stop loss, which is okay. That is, even though that is a pretty much a bigger stop, it's like a 2.5 pip stop. That's 100% okay. But keep in mind, guys, this is also a mistake that a lot of you also make as well. So what is the solution? When in doubt, zoom out. Okay, so what was the actual play? This was the candle of interest, and then I should have derived. Okay, that was my mistake. This candle should have been pointed out, and the point of invalidation would have been down here, right? So it's a very good lesson for me because I was genuinely confused for a couple of minutes as to why that happened. So see, if we would have, you know, executed or derived this, right? We're now deriving this M2, right? Perfection there, M1, right? Perfection there as well. So, and even you want to consider this wick here, and then that's where that mitigated. But yeah, I think that's a very good lesson, right? Let a pair show its hand. You're obviously going to be looking at M1, M2, and 3 because your bias is derived from M30, M15, H1, H4, and daily because that's what we discussed last night. But, right, it's important also to zoom out even when looking for an entry, right? Because as you can see, it's very easy to get caught up with order flow. And instead of wanting to get the exact snipe, right, I should have, you know, been wanting to just make sure I win the trade because at the end of the day, that matters more. Even if I would have taken this in terms of the overall trade with a 3.5 pip stop, this is already 8, 9, 10%, right? Because I'm aiming for intraday targets, which would be here and here, right? These targets are only for me more so to break even than to take partials, which would be up here, right? And when we're thinking RR, right, don't just think RR, think your account size as well. Think about the risk to reward in terms of your account. Let's say you're trading $5,000, right? This 10% is $500, right? So think money as well, but don't also be attached to that money per se, right? Don't be attached to that monetary reward. But yeah, anyways, I hope you guys enjoyed the small breakdown. I will probably update this because based on what has just happened today, we have given the disruption here, right? The break of structure here, right? That was the last candle to the downside that created that downside move, and that was taken out. And so this is now a solidified low based on low, high retracement. So naturally we could come back up here, right? So if this happens, I'll make a full breakdown. And yeah, we'll just go from there. But anyways, I hope you guys enjoyed the breakdown, and I'll see you guys in the next Zoom.